Oh, sorry. Oh my God. I was waiting. I'm so sorry.
Hi, everyone. How's everybody doing today? This is ACDC, Araceli and Colette Dynamic Change. And my name is Araceli, and I am a transition wealth advisor and a real estate investor. And I believe that every life transition doesn't have to be financially devastating and stressful. That's what I'm here. And I normally work with professional women to empower them to take charge of their financial life. And I'm here with my partner, Colette. Colette, can you introduce yourself?
Hi, everybody. I'm so sorry. Please edit that out. That is on my phone. I'm just dealing with a couple properties. My name is Colette Rabba. I am a real estate broker in the GTA West End. I love helping families. I also I do help investors as well if they want to buy residential property and rent it out. And that's why my life is all about landlords and finding people to get into the right kind of properties, if it's a short-term accommodation, long-term accommodation, or a fix and flip. I do it all. And that's why we love doing the show, because we're here for you no matter what, if you are buying or selling real estate, and if you want to invest in real estate, or today's subject is the stock market. So this is something that we all, when we have our big pile of money, how do we invest it? What do? We go to Araceli and say, what do we do?
That's right. Well, yeah, that's exactly it, Colette. Thank you for kind of introducing a little bit of the subject today. There's a question that it's always been asked: what do I invest? Do I invest in real estate, or do I instead go to the stock market? Well, today, I'm a licensed agent and I am able to advise you, but this is general advice because I don't know you personally, right? And to find out exactly what you're doing. So I have a quick presentation, and I'm going to be asking you some questions, Colette, to help me out with the subject today. So
yeah, sure. And you know what, that's the other thing too. Sometimes it's not a clear black and white answer too. Sometimes
nothing is really.
Right. And for me, personally speaking, I have invested in both. I have invested in the stock market, and I also have real estate investments. So it's something that if anybody's growing their portfolio, I think first and foremost, we have to say, talk to somebody like Araceli, because that way you can really get down to what your goals are. And for, not knowing anything what your presentation, I know a little bit what it's about, but generally speaking, you have to make a goal first. Is that correct?
Can you see the screen?
I can see black.
Yeah. This is really bizarre.
I know, I saw it before. Your share screen. Oh, there it is.
Okay, but do you see two screens?
Yep. No, I see us, and I see the real estate investing versus.
Okay, so perfect. So that's great. Yeah. So this is one questions that a lot of people have in their mind. Should I invest in real estate, or should I invest in the stock market? Well, I'm just going to give you a few things that might help you decide which one to go with. Okay, so that's basically what is here. So I'm not telling you to invest in one or the other, because it takes many factors. So the first thing is, which one should you invest in? Which one, right? Both are good. Both the same thing that Colette, I do both. And I'm going to tell you just the facts. So basically it's a matter of personal choice. Yeah. And this is super, super important. It depends on your current financial situation. That is so crucial. If you don't know what your financial situation is today, let me know. We can sit down and we'll go over an assessment. It's very easy. Also depends on your risk tolerance, goals, and investment style. And with that, I'm going to give you a couple of things that you need to consider, okay? Normally in the stock market, you need an amount, obviously, to invest, right? So yeah, it doesn't matter. In your experience, how much money do we need now to get into the stock market, like to buy real estate?
Oh, to buy real estate. Well, you're looking at tens, if not hundreds of thousands of dollars, because even a down payment, and then if you borrow from the bank, I mean, a condo, let's say, the cheapest condo maybe in the GTA right now is maybe in the $400,000 mark. So it's really, if you're looking at just, you're doing your down payment, and then you have to pay your monthly rent, your monthly mortgage on top of that. Plus, don't forget, if it's a condo, you probably have condo fees.
Yeah.
So even though you're saying, oh, I'm investing in a condo, there's still a lot of money that you need monthly too. It's not just like,
Correct.
okay, I'm gonna put this money in and then, I'll let it ride, like the stock market. So yeah, you need a lot of money for real estate. I think
Correct.
that's your answer.
Exactly. So the amount that you require to be in real estate, it's usually higher. As I said, dependent. If you go in the States, it might be lower, but
Right.
it still is considerably higher than going into the stock market. Going into the stock market is relatively easy. You don't need that much. Maybe even $100 a month will get you to buy stock
Yeah,
every month.
you can buy stock that's $5.
Exactly. So you just have to weigh that. Like, do you have an amount set aside that you may want to have enough for a down payment?
Right.
And then, or if not, then you may want to get started, right?
Right.
So
yeah.
that the amount required is different. Usually for real estate is higher than to the stock market.
Yeah.
Now, time horizon. This is something that a lot of people kind of get confused, right? Because if you buy a house today, Colette, do you want to sell it tomorrow?
I hope not. No, I never want to recommend that.
Exactly. So probably no. The majority of people, they think about real estate for a long term. And
Yeah.
I'm talking about 7 to 10 years before you can actually sell it, right? Even if it's your own property or for an investment property, which could be a rental, right?
Right. Right. Yeah.
Somehow, in some cases, people think that the stock market is something that you can put money in and tomorrow you're going to be a millionaire or you're going to double your money, right? It works the same way. So the time horizon for real estate investing and stock market investing is basically the same. 7 to 10 years is when you are going to see a good return in both of them. So I just want to make sure that people understand that, because I'm going to continue on the other slide because it's going to make more sense, right?
The only thing I can add to that too is because why in the real estate world, and probably in the stock market world as well, why we say 7 to 10 years is because markets do fluctuate, and you always see historically when you look in the past, to really get familiar with the future, how things, there is a cycle. There's always a cycle. So any economist will tell you the 7 to 10 year mark is for any of those fluctuations to go up and down. And then after that period of time, things have a way of working themselves out. So don't worry about I hate to say don't worry about the fluctuations in between, because we all do. We all go crazy within that time. And if you can hold off, even to say that with real estate investing, to say, oh, no, that's not true. Look at how far the market has jumped in a year. But you have to also factor in all your costs. And if you do have a mortgage, there's a huge penalty if you get out of that mortgage early. So knowing mortgages, you're looking at a 5-year rate that you get locked into. So after that 5 years, and as long as you're paying everything within that 5 years, that mortgage will have a lower penalty rate if you get out of it very close to your end date of the 5 years, and then you renegotiate your mortgage terms. That's why we have this 7 to 10 year rate, or even 5 to 10 year rate with both real estate and stock market. Sorry, go ahead.
That's correct. So the next thing is time managing the investment, right?
Yeah.
When you are in the stock market, you normally, after you decide where you're going to be, and I want to be very sure that there's kind of two different things. In the stock market, you can either buy a specific stock that you're doing it yourself because you researched it, or you can buy a portfolio, which it has different companies. And usually you will do it with somebody like myself that, we assess your situation, and then I can suggest a few different portfolios. So But in any event, after you have decided that, there's really nothing to do but to continue to put money in or put the lump sum amount of money. And there's really no management from your side. However, in real estate investing, you do have some management to do, right? If you are acquiring a property that you're going to be renting, you need to either deal with the tenants, maybe the realtor that is going to help you, like Colette, getting a tenant in place. But there's always little nuisance that you have to still manage, make sure that the bills are paid, property taxes, insurance, any of the utilities, if you have to pay the utilities, or any repairs that happen during the time that the tenant is in place. So the time managing the property is higher than what you would be spending in managing your stock market investing.
Right. Yeah.
So the next thing is the diversification. So real estate is actually an asset class. It's real estate. You buy real estate, it's a house, right? In the stock market, it also could happen both ways, that you can pick something specifically. Let's say that you buy a specific stock, right, that is in manufacturing. So you are basically going to ride the wave of that specific asset, which is manufacturing. So if manufacturing does well, then you will do well. But if you pick other stock, then you might not do so well, right? But when you have something like, the majority of people that invest in the stock market, they usually will take something that is an index fund, which is representation of all of the funds in certain category, or you would pick a diversified portfolio, which it has different companies, right? From manufacturing, financials, and so on. So right. You have the opportunity to have diversification when you are in the stock market. But when real estate, that's it. If real estate does badly, then you will do badly, right? So there's only one asset class when you're doing real estate.
But sometimes when you buy real estate in different areas, because look at even in the GTA, if you buy in a certain area, and let's say you buy 2 or 3 properties, but they're all sort of spaced out in different, let's say cities or municipalities even, that can make a difference when you say, okay, let's diversify, and you take the positive and you take a higher earner in this area, you make more money in rent, let's say, versus another area, then, you can diversify real estate, but if you buy only one building or one, even sometimes people will diversify in the sense that they'll buy a residential property and a commercial property or a mixed use. And if one doesn't do well, let's say like a 2-story building that has an apartment, a residential apartment, and then commercial below, things like that, you could technically say it's diversifying. If one renter doesn't do as well as the other, let's say during COVID, I know someone who has a restaurant and an apartment above. The restaurant had to shut down. They didn't get their full rent in a few months, but they didn't have to worry about that. The residential people paid their rent. So there's a way to do it, but we always recommend, I have no problem saying you should always diversify your portfolio.
Yeah, absolutely. And as I said, we'll go back to the same thing. Depending on your current situation and what your risk tolerance is, right? Which is actually the next one. Risk, right? Yes. So this is something that you need to know yourself in order to make a decision. Because some people say, I don't want anything to do with tenants. I don't want anything to do with repairs. I really don't like any of that. So then you know that you're not going to be investing in real estate, correct?
Right, exactly.
But one of the things that I ask always is, how do you define risk, right? And Colette, let me ask you, do you have a car?
Yes.
Okay, so do you normally, now we're not driving as much.
Yeah.
But normally for your job, you have to go somewhere, right? You have to
go
and show your clients' houses, correct?
Of course, yeah.
Now, let me ask you this question. If you leave your house in the morning to go show a house, is this 100% guaranteed that you're going to return home?
No, of course not.
Of course not. There's always there's always that uncertainty, right?
Of course,
But
yeah,
the thing is there certain things that you can do to mitigate that risk?
of course.
Of course
Sure.
you can, right? So the first thing is obviously you're gonna follow the rules of the road, right? You're not gonna run any red lights.
Yeah, yeah,
You're gonna do the speed limit, so on, right?
yeah,
You're gonna have insurance. Make sure that you have insurance.
yeah.
You're gonna make sure that your car is well taken care of, so there's no faulty tires or brakes that might be not
Make,
in good
yeah,
condition, right? So general maintenance. So all of those things you have control over. You know,
yeah,
you can't control a drunk driver on the road that is going to hit your car. That's the
right.
only thing that you can control. But when you go in to assess the risk of you having a well-maintained car, having insurance, uh, following the rules of the road.
Well, having an experienced driver too.
Exactly, right? So you're mitigating the risk of having an accident.
Absolutely.
So
Yeah.
the more of those things you do, the less chances of you having an accident, but never 100%.
Right.
It's the same thing when you go into the stock market on real estate investing, right?
Yeah.
You need to assess certain risks that are associated with each one of them and have an educated decision and then go for what you decide to do. And
Right. And
obviously,
I know, like, let's say I like your parallel with driving, because there are things that you're just not going to do as, a driver, let's say, compared to investing too, where if you feel like I'm using my instincts when I'm driving, right?
exactly.
I
Yeah.
think we all have to,
Yep.
but also at the same time with real estate investing, and this is something that using your instincts is very important. And if you don't have those honed instincts yet because you don't have that, that background in either
Yeah. Or
driving,
experience, right?
right, or experience, you have to go to the professionals and really lean on them to say, okay, what do you think? Yes, we'll give you our opinion, but it's still your instincts and your level of tolerance that will really make the difference of moving forward.
Yeah,
For
absolutely.
example, can I give you an example?
Yeah, go ahead.
My background today, I've had it on before. This is actually one of my income properties that I have. And I was so nervous when I bought this first property, where I know what I'm doing. I have experience. I have the background. I have the knowledge. I have the risk tolerance. Everything was there. In the end, what was it? What made the difference was my instincts. I had to trust myself, I had to trust my ability to see beyond what I actually bought, to see, what the future is. But I didn't do it without a goal. I
Yep.
had a goal in mind. And that's the first thing you have to do with either investing in this real estate or the stock market. You have to know what your vision is. What do you want to get out of it? And then you have to actually go out when you know the time is right. So that's the other thing too. We've said this before in other shows too, where we look at the end result first before
Mhm.
you even jump. You have to know what you want out of it, and that has to do a lot with risk, your risk tolerance, but have your exit strategy figured out before. You
Yeah,
can always change it later on, but have that goal in mind.
correct. And you know what? There was exactly the same thing. I had a very similar story for my first investment property. I really didn't know much about it. And when I kind of consulted with my friends, everybody went look at the house that I bought. It was like, ooh, this doesn't look that good, right?
Exactly, same.
And but I had that goal in my head of what
Yeah,
I could do with the house. And even they didn't really say don't do it, but they really didn't approve it. You know what I mean? Like,
because
very subtle, right?
that's exactly because their risk tolerance wasn't as high as yours,
Mhm.
and that's why we do what we do, because we want to give you that knowledge and experience that we have
Yeah.
in what we do, to help you get over that hurdle of stopping yourself from doing something. So exactly what Araceli was saying before, everybody has a risk tolerance. but you have to ultimately make that decision of what you're okay with taking on and what you're like
Absolutely. But
much.
the more you do an investigation, whether it's the stock market or real estate investing, that's basically the more education you have, or the more people helping you that have done it before,
Yeah.
that will give you more chances of succeeding in either one of them, right?
Yeah.
Now, let's go with fees and rate of return on both of them, right?
Yeah.
As you know, real estate requires a little bit more management of your time and money as well. And the stock market requires very little bit, not as much, but a lot of people say, oh, I don't want to do the stock market because it has fees. It has a lot of fees, right?
Yeah.
Well, let me ask you something, Colette. Does real estate has fees?
Of course. Of course. Of course. Of course. Like many during the whole time frame, just, you know, not just when you buy, you
Yeah.
have your real estate fees, you have your lawyer's fees, you have like, how can you say there's no fees? Of course, there's always fees. There's taxes. What fees do you want if there's a
Absolutely.
property
Right.
manager? Like, there's
Yeah.
a ton of fees. Yeah.
There is a ton of things that you need to maintain uh, during the time. Now, the rate of return sometimes would be better if you're able to support, or your tenants support the ongoing expenses that you have to do every month, right?
Okay.
Sometimes it's better to do it that way. It depends where you do it as well, right? As
Right.
you know, I invest in the US, and the return and the appreciation is not as high as we have here in the GTA.
Of
So
course.
sometimes it just doesn't make sense to do it. So that's why it's so granular to the specific area where you decide to do the investing, to decide if this is worth my while to wait 5 years, 10 years before I sell it over, or it's not, right? And the same with the stock market, somebody has to manage those funds for you. That's what the fees are there. So
Right.
it's kind of like the same thing, right? So that's what it depends. If you don't want to do a lot of the management, then it also, actually in real estate investing, I would say that the fee of you taking the time to take care of things, it's also a fee because it's money, right? If
Of
you are
course.
spending time doing something, it costs you your time. So
Right. Of course. Yeah.
so that is when it comes down to fees and rate of return. Now, liquidity, that this is a very, very important one. Even though we always say that, if you can wait 7 to 10 years to decide to either sell it or do some kind of upgrade for you to get a really good return. In some cases, if something happens, a transition in your life happens, you may have to liquidate it. That means sell it, whether it's your real estate investing or your stock market investing.
Right.
Well, the liquidity is easier. Like if you want to take your money out of the stock market, within a few days you will have it. You may have fees and so on, but the same with real estate. Now, real estate, it's a little bit different because even if you put the house for sale today and you get an offer, you are not going to get the funds out until it actually closes, which it could be 30, 60, 90 days, sometimes even more.
Exactly. Yeah.
So that's why it's important to have kind of a mixture of both. In the case that you have some kind of an emergency that requires some funds, versus to have something that you can leave for the long term. So that is when it comes down to liquidity.
Yeah.
And this is all I have for you today. So which one are you going to pick?
I don't
Tell
want
us.
to pick either one. I want to diversify. I want a little bit of everything. That's like, when you're at a buffet, you don't just eat the one thing. Like, there's so much out there and you're like, oh, well, how do I do this? So that's why you work with a financial advisor to really sit down and say, okay, but again, okay, hold on a second. I got to take that back for a second, because ultimately the biggest difference that I see in real estate versus stock market I have to live somewhere. I have to put a roof over my kids'
Absolutely.
heads. So ultimately, you need a place to live. I'm not going to buy into the stock market and live in my
Yeah.
car. Like, it's, you know, like let's
And
be real.
actually, there is one thing that I just left out, which is leverage, right?
Ah, okay,
Leverage is important because if you, let's say you already have a house where you live in, but now you want to buy another house. If you, the house is 500,000 and you have 10%, 20%, you're able to buy the entire house. They're not going to give you, 20% of the house. They
right,
give you the entire house because you can now leverage. You say to the bank, put this money in, we'll loan you the rest of it.
right,
Stock market, you can. You actually have, whatever you buy, is that what you're going to get, right? Nobody's
right.
going to loan you money to buy stocks.
Yeah, you can't
So
use the equity in your house to, or sorry, the equity in your stocks to buy more stock or to
that's
buy
correct.
property, the other way around. But you can use a property and use the leverage in your property to buy stock or another property.
Yeah,
So I think that's what you're saying,
yeah,
right? So
that's correct.
hallelujah, like that's what I want to hear. That's what I love to hear. Because this is the thing that I wish I knew this like 15 years ago, 20 years ago, where I've bought so many houses where I didn't think I could buy another house or a bigger house or move forward
Yeah.
without selling that first house. So I think, in my own lifetime, in my own not knowing, not having you in my life to say, hey, you don't have to sell your house. You could buy your next house and keep your current house, use it as leverage, use it to buy the second property, rent the first property, then you have your second. Like all these things make a huge difference. But, in reality now, the economy, the way things have moved so quickly and so like real estate is so expensive right now in the GTA
Yeah,
that it's kind of impossible to do that right now unless you already have so much liquidity in your house that you've already paid off your current house to
correct.
buy your second property. So this is a really, really good experiment. I don't want to call it an experiment, a really good challenge for those people who are close to retirement age
Yeah,
that they need a little bit more money to retire on, but they don't want to leave their current house. I think that's a challenge to all these baby boomers and, younger, to really look at their finances, to talk to someone about it, to say, look, like you don't have to sell your house to get this, pot of gold
yeah,
that you think your house is worth. Use it to leverage to get what you want without having to leave.
yeah,
So
that's
I
correct.
have, for example, I think you do as well, but I have a 5-year goal and I have a 10-year goal. And my 5-year goal is very different than my 10-year goal. I'm not old enough to retire. Look at me. I'm not going to retire, but I need a little bit of freedom in my life, let's say. Now that I'm
Absolutely.
a little older, I would like to do something different. And how do I do it without working a 9 to 5 set job? My life is very busy. Real estate is very hectic.
Yeah,
I'm pretty much working 7 days a week. Same thing with Araceli.
yeah, the same with me.
Client wants you got to jump. No question about it. I love that about my life. I love that about my business, but at the same time, everybody needs that kind of break.
Yeah,
And how do you be able to afford that without completely losing your business?
correct.
So entrepreneurs, I give you a challenge. All you people that want to retire soon in the next 10 years, I give you a challenge to look at your finances and to talk to Araceli, talk to me about your financial goals. If you want to go into the real estate
Yeah,
world of investing or stock market investing, or just to top up your RSPs, how can you do it? There is money. There is. I'm sure you have equity if you own your own house already. Tons of equity, and you
and you
just
know what? It's not only that, Colette, you
yeah,
might be able to help them convert that house into
a
short-term
money maker.
rental,
Yeah,
separated, do something. There's lots and lots of options. The most important thing is that what is what is the goal, and then we can break it down from there to where you want to do. And there's many different ways. So take
right.
the challenge. Now that we are at a home, going out less,
Yeah,
it allows you to evaluate what is really important, what actually haven't you haven't missed so far, right? That's
Right.
during this time that we're not able to buy all the stuff, to get where
Right.
we normally go to drive as much,
Yeah.
and see how your finances are changing. This is an opportunity for all of us to sit down and reevaluate where we are and come up with another plan, right? Because that is what it's all about. It's a
Right.
moving plan that you can always change at any time. So
Absolutely. I agree with you 100%. And your goals do change. Like with this pandemic, like I really value travel way more than I
oh
did
yeah.
before. So just that one little thing too. And really spending time with your family and missing those people that you love and you want to see again. How are you going to do that? And how do you make that possible?
Yeah,
And how are we going to afford all these great parties we're going to have?
that's right. Yeah, I
Yeah,
can't wait.
once things open up again.
Uh,
So, that, like Araceli says, finances touches our money touches everything. So be prepared, know what you want to end up with, know what your goals are, and talk to that lady. She's awesome.
Thank you, Colette. And thank you guys for being here. If you do have any questions about either one of those investments, or you are kind of unsure if you can go one way or the other, give us a call, send us a message, anything like that. And with that, we'll leave you and we'll see you next week. Thank you for being here.
Thanks, everybody.
Bye, Colette.
Bye.